I went deckless to this venture capital forum. I sent a few messages out. One message landed with one investor in particular.
How much have you raised?
A little bit over $3 million.
We are back with another episode of Second Opinion. Today we have Brandon Aversano, the founder of Alloy, who is here to tell us about his recent successful fundraising efforts without using a pitch deck. I am really impressed with Brandon. I'm really excited to learn more about Alloy. It's a gold marketplace, the first of its kind that offers trust and transparency in the gold buying and selling markets, which just feels like one of those totally forgotten markets for the last several years. It's been there, and I'm curious a little bit about the story, Brandon, but definitely want to talk about the fundraise.
Thank you so much for having me. It's a pleasure to be here. Really quickly, the way that I kind of stumbled into founding the Alloy market, I followed a more traditional kind of corporate career path, was working at JP Morgan at the time, diagnosed with cancer very suddenly, attempted to sell some gold jewelry to pay down medical debt, and went into several jewelry stores and pawn shops, had a horrific experience, intimidating, bullying tactics, everything that you can kind of imagine when you think of going into a pawn shop to sell jewelry. And what I found when I got home after not having sold the jewelry was that the online options were just digital equivalents of the brick and mortar pawn shops. They engage in the same kind of predatory tactics, bullying, the lack of transparency, and sort of acting upon the lack of consumer education in the space. And so it was just kind of a lightning bolt moment for me that, hey, if I'm experiencing this problem during one of my most sort of vulnerable moments yet in my life, I imagine that there are many other folks who are experiencing this as well. And I can very humbly say, since launching in 2023, that thesis and hypothesis has very much proven out, because we now transact with clients in all 50 states and US territories. So we're really proud of what we've been able to do. We like to say that we are the most transparent, highest paying, and easiest to use platform for the everyday person to sell their gold jewelry and other precious metals.
That's so exciting. It's fascinating because I think it's like one of these markets that people will, just kind of assume is going to be the way it's always been. And it just takes an innovative person and an energetic person like you to say, you know what, this shouldn't just be the way that it's been for the last several decades. And so it's cool to see it playing out and you finding success with it, because it almost feels like it's so obvious, but it's just never been done. Kudos to you for jumping on it and creating something that I think is going to hopefully impact a lot of people today and into the future.
Thank you.
Really
so much.
excited.
I appreciate it.
So, Brandon, tell us quickly, how much have you raised?
It's a great question. So we've raised sort of cumulatively across some early friends and family rounds, my 401k and entire savings early back in the beginning, and then across two priced rounds, a little bit over $3 million since inception. Seems like a lot of money to me as a first-time founder, but my approach has always been to raise very conservatively, and raising was never like a sign of success or the goal in and of itself. It was simply and merely to support our vision and growth. And so that's always been the philosophy behind how we go to market when we're looking to raise capital. But it's interesting you started with, I raised without a deck. And I think that seems just absolutely outrageous when I tell folks that. And let me caveat that by saying there probably is a deck in existence from the early days where I put together all my ideas and shared it, but I certainly did not follow the Sequoia pitch deck model, if you will.
Yeah.
And so my approach to fundraising was sort of my approach to company building and how I landed here in the first place. It was just about establishing human connection and human relationships. And so in the very beginning, I kind of jokingly mentioned that I dumped my whole 401k and savings into the company, and that is 100% true, and lived in debt for many years. But I ended up getting to the point where we needed a little bit of capital to support our growth from sort of a brand new brand in the space to one that had the credibility enough to generate what I like to say gold in the door, but essentially like the ability to convince clients and consumers that, hey, we are this legitimate, trustworthy, credible business. And so I attended a venture capital forum in New York City, and I went deckless to this venture capital forum. And I sent a few messages out on the sort of conference app ahead of time and at the forum itself. And one message landed with one investor in particular, and that was, hey, nobody is going to take a chance on a first-time founder who's trying to operate in a decade-old predatory industry that's about moving millions of dollars worth of physical assets around the United States. Will you meet with me for 15 minutes to just chat with me and learn a little bit more about what I'm up to and what we're doing? And this investor was so impressed by the approach and just by the fact that I sort of openly acknowledged the elephant in the room, which is like, most people are unlikely to ever even take a call with me or meet with me because I'm a first time founder and because this business sounds so crazy. And so we stood at a cocktail table in the Javits Center in New York City for about 15, 20 minutes. And he just gave me an opportunity to share my personal story and a little bit about my background. And we just immediately established a rapport and a real relationship. And subsequent to that, the way that we sort of engaged in the capital raise is we hosted a series of AMAs, which are Ask Me Anythings,
Yep.
and they were an angel syndicate. And so basically I said, look, I'm not going to put together some like pitch deck to try to convince a bunch of people like what we're trying to do. Let's just get on the phone. Let me just be like honest and raw and vulnerable, and people can ask me whatever they want to ask me about what we're trying to build and what we're trying to do. And so we hosted probably 2 or 3 Ask Me Anythings. And it was this particular angel syndicate. There were folks based all over the world, including Asia. And so I was up at, 2 o'clock in the morning and all doing meetings all at all sorts of odd hours of the day and night. But what ultimately was successful, what I attribute to our success or my success in that early fundraise, was just the true, honest, open, vulnerable, raw connection that I developed with these angels. And I think trying to do that through the medium of a deck is really hard. And look, that's not going to like work for everyone, and not every angel syndicate's going to be okay with that. But that is how we started. And I thought really long and hard about how that approach worked. That resulted in us raising a little bit over $500,000 in capital and seed capital to get started. Mm-hmm. And then it just became very clear that there are lots of different kinds of investors out there. And there are investors who are very traditional VCs who want to see your Sequoia. This is the deck, A to Z. I want to see the problem and the solution and the this and the that. And then there are investors who are really interested in your story and you as a person and you as a lead and your leadership team. And you can't get that across through deck. And so our approach to subsequent raises was always to find investors that had a similar ethos and attitude. And that was, let's just connect as people and forget about like the 10, 20 page slide deck that is outdated after every week anyway. And that has led to subsequently successful, repeatedly successful fundraising rounds. We did 2 priced rounds after that. And those investors followed on, the original investors followed on all 3 times. And we got a whole host of new investors in the meantime.
That's an awesome story. It sounds like that initial meeting was a pretty powerful moment to you, because I think you kind of realized at the time, what I'm really doing at this early stage is I'm bringing on partners, not just investors, not just blank checks. I'm looking to, build a business. And I think some people forget that, especially at the earliest stages, it feels like it's just a numbers game. Flipping the narrative towards, I'm one person, I have this vision, I need other people to financially back the vision, but also to emotionally back the vision. I think you had that amazing moment. Do you feel like that's like played out from a business perspective, that the early partners have just been there each step of the way to support Alloy and credit them with the early success of the company?
Massively, hugely. Yeah. It's not just me at Alloy anymore. We have a leadership team. We have a head of investor relations. And so our philosophy is we're really picky about who we invite to the party, the Alloy party. We have only invited folks that really share our ethos and our philosophy. And that has resulted in such a symbiotic relationship between investor and investee that it has made the journey far easier than it could have been. I talked to fellow founders and peers that have had like real horror stories with their investors because they were just so misaligned on things from the beginning. And and I don't want to say it's because I didn't have a pitch deck, but like the fact that we got like the pitch deck out of the way, and don't get me wrong, all of these investors did due diligence. They looked at our numbers, they looked behind the scenes and under the hood. Like it wasn't like they just signed blank checks, but just that like the establishing of that real rapport and human connection has just allowed us to grow and build together. Like I don't really look at my investors as like scary people who, I only email once a while to give them an update. It's this like big collaborative community. One of our big investors is Hustle Fund, and that's like what they're all about, like
Yeah.
it's about like working together to build a bigger and brighter future. We just were really selective about the partners we invited and built very human relationships with them.
That's amazing. So as you continued, obviously you had success with that early fundraise, and at that time, you're pitching a story and a vision, and then the business has been built in the interim time, and you've raised true price rounds. And I'm curious how that approach to I'm about to go fundraise, what am I doing to prepare my store from a storytelling perspective has changed. The pitch needs to be more about an actual business than a vision. How that process has been kind of gearing up for those raises without necessarily putting your thoughts out on paper and sending that off into the ether.
Yeah, it's a really good question. I mean, I don't want to say we were lucky because a lot of blood, sweat, and tears went into it, but our product, our marketplace, it took off like really quickly. It
Yeah.
sort of achieved product market fit, if you will, very fast. And so the conversation around traction was like a really easy one to have. We did our first year, which we were only alive for around 6 months in 2023, we did around $350,000 in gross. And
Wow.
then in 2024, we did 4.4 million. So by the time we went to raise additional capital in the future, the story kind of told itself and the vision and the product was already there. I don't know if I'm answering your question directly, but instead of approaching investors and trying to like impress them with this like well thought out pitch to try to craft a story around it, it was like, this is our business and this is what we're doing. And like, these are the
Yeah.
numbers. And we have evangelist clients all over the United States, and all of our reviews are real and public. And you can read them. And it was really important to me, very important to me, that the investors that we were thinking about partnering with were not going to turn around and say, you know what your focus should be? It should be on making some fancy deck and wasting a bunch of your time to impress me with some fancy crafted story
Yeah.
instead of focusing on building this incredible business that is growing. And that's where your focus and attention should be. And so that's what our partners, who are our investors, have encouraged. It was like, don't stop focusing on building the business to just fundraise, right? They sort of enabled us to continue building while we fundraised, which I think is like a really unique experience, because I think a lot of founders, a lot of CEOs basically have to stop what they're doing and
Exactly.
focus on making the pitch deck perfect. And, they're moving the periods around and the boxes around on the slides. And that was just never, it was like, if that's what you're going to care about as an investor, then we're just not going to be the right fit.
That makes sense. And I think the early success of the product, while you may say, obviously, you may say that there's luck involved in success in general, but perhaps it is credited to your obvious energy and operational capability, but the early supporters that, are able to come in and help you not make the mistakes that other people might make. So that within 6 months, now all of a sudden the story goes from here's my vision, here's my personal anecdote of why I want to create this vision to we're actually just crushing it. You want to get on board. And
Yes.
so that process typically takes people a little bit longer. It was necessary for you to continue to find that success with fundraising, but perhaps that those early investors and those early supporters enabled you to kind of, have that strong seat at the table with the subsequent fundraises. It's all kind of connected. I'm curious though, when you, especially towards the later rounds or the more recent rounds, I'm curious if you got some pushback from new people that you met with. I can't imagine that there was not a single investor that asked you for a deck and you had to say something about what you had put together. And I'm curious how any of those conversations went down. Was there any friction that you had to deal with in this process?
I would say the one investor who invested and who we love and they are amazing partners is actually Ben Franklin Technology Partners of Southeastern Pennsylvania, which is like a state funded, Pennsylvania funded entity. And they have, because it's taxpayer dollars, they have like a rigorous, pretty structured due diligence process. And part of that is like they want a pitch deck. And so I said to them, like, you can have a pitch deck, but it's going to be from 2023 and wildly outdated. And it's just going to basically show you the original vision. And they were okay with that. And that was really cool because I spent a ton of time with their leadership team. We went through all of, P&L, balance sheet. They looked under every rock and stone and everything. Even though that they required a pitch deck, they just understood that our focus is not going to be on building some like beautifully crafted deck. It's going to be on building this business and like, do you want to be a part of that? Friction is definitely not a word that I would use to describe investor relations when it comes to Alloy. The other thing is, I will say, once we established really strong relationships with both angel syndicates, individual angels, and then institutional investors, the relationships were so strong and so real. There was nothing fabricated about my relationship with our partner. It was not wildly difficult to call them up and say, hey, this is how far we've gotten since we last spoke. This is what we committed to hitting from milestone perspective and everything else. We want to raise a little bit more capital. And all of them said, great, let's do it. Right. And so almost every investor, if not every investor that participated in our first price round, participated in our second. And that was because I kept them, they were true partners. They weren't just investors. They were kept up to date every step of the way. I didn't like get a check from them and then never talk to them again. They've been helping us build Alloy since they wrote the check. And that was really important to us. It's like, are you going to add value beyond the check? Yes. Well, then welcome to the party.
You're not just a number in their portfolio or a name on the website. You've had this authentic approach, which has self-selected a type of investor that is there for you when you want to raise subsequent rounds and there to connect you, I imagine, with other investors who, fit the same type of need for authenticity and that personal relationship between business partners at the end of the day, right? More than just follow on, do you feel like those intros enabled that process to just always be a little easier than it might be for other founders once you got the right people on board?
Yes, absolutely. I mean, I remember, I probably shouldn't even tell the story, but at the most recent round, one of our investors made an introduction to a smaller VC firm based out of New York City. And this VC firm, they invest more traditionally and they look at sort of like unicorn businesses and like that's kind of the approach. I only heard this after the fact, but the VC almost immediately passed on us because of our sort of like website look and feel and the fact that I was like so anti like putting together a pitch deck and all that. And our lead investors were such advocates for me personally as a founder and for Alloy as a company. And this is secondhand from the investor, but they were like, you have to meet with this founder. Like, you just have to get on the phone with this founder and have a conversation with Brandon because you will understand why this is such like a great opportunity. I essentially had a team of people doing PR on my behalf in a very like authentic and real way when I wasn't in the room with them, right? That's really powerful. And I think that speaks to the sort of two-sided relationship, that we've been able to develop over the last 3 years with our partners.
It's amazing. It's an awesome story. It should be a good reminder for people, founders, of course, but for early stage investors, pre-seed investors, angels, that while you might be the smallest check on the cap table from a nominal amount in a full life cycle of a successful company, you can have such a strong impact in the subsequent ability for that team to fundraise and network with the right people and then do ops and all the things. Like, early stage investors have such a strong capacity for impact, and
Amazing.
Alloy is a perfect example of the best people possible got on board and have supported an awesome founder, and it has created gold, so to speak.
If you will, yeah. I mean, look, some of our smallest investors, again, from a check size perspective, have had the most outsized impact on Alloy. I'll name one by name. His name's Colin Gardner. He runs a fund called Yonder VC, and he invests in early stage marketplaces. And not like the biggest check that we received, but I cannot even tell you the amount of connections and recommendations and insights and his willingness to meet with not just me, but the rest of my team. It has just been such a value add. And I think, again, that just speaks to, on the one hand, my willingness to be like hyper vulnerable and probably share more than most founders are willing to share. And then also just finding the investors who share that similar ethos and that are about more than just writing checks, that are about putting in both equity and then sweat equity also. And I would say that every single investor on our cap table does both.
It's amazing. What a cool story, man. It's a great reminder for people, whether they need to build a deck or feel like they need to build a deck or will build a deck, to just really be authentic in their approach with bringing the right people on board and, looking to build relationships with people. It's not just spray and pray that's going to, it may work for one round, but think about the long-term impact of the people that you're going to bring on that cap table to make the subsequent rounds that much easier. So I think it's a
Yes.
great lesson for a lot of people, both investors and founders. And so I appreciate you sharing it.
Yeah.
What's next for Alloy? I have to ask, are you going to keep this no deck as like we will not make a deck ever for the subsequent fundraising rounds of Alloy? Or do you see maybe going back on that depending on how big you guys get? And then what's next for the business?
Look, I will never say never. So, as a former management consultant, I do know how to make a deck. I can promise you. Like, I know how to put a deck together. Where we started, our approach to fundraising has never been like, let's follow the alphabet train. Like, let's raise our Series C. Let's then get to Series A. Let's then get to Series B. One of our big goals was get to profitability as quickly as possible. So the need to fundraise is within our control and our destiny.
Yeah.
And so what's really interesting is right now, Q4 of this year, we will be profitable as an organization. We have a lot of warm investor leads that have not invested, that are sort of like later growth stage investors. And we have conversations with them. And it's such a different kind of conversation because we're not having a conversation from a place of need, right? I'm not having a conversation with the VC and saying, hey, we're going to run out of money in 6 months. So like, can you be an investor or a partner? And it's more of like, hey, this is where we're at. This is where we're headed. We're going to be profitable. We may need to raise some growth stage capital later on, but it'll come from a position or a perspective of strategy and not from a perspective of need. And it's just a wildly different kind of conversation. In terms of where we're headed, I would say, very humbly, we've been doing really well on the direct consumer procurement of gold jewelry and other precious metals. And we have been piloting and have been seeing like really promising results on our ability to resell certain pieces of jewelry back to the public. And so we've done a couple of small pilots leveraging sort of other platforms to see if that were a possibility. And it's very much proving out to be one. And so we are working really hard on a product that allows all parties to win in the end. So it allows the original seller of the gold to Alloy to extract maximum value ultimately. Like if we are able to sell the piece that we buy from you for far more than we thought we were going to be able to sell it for, you're going to win also. And so it's taking a little bit of time to make sure all the technology's in place in there. Our mission is to create financial opportunity through the fair and transparent exchange of gold jewelry and other precious metals. And we're not going to stray from that. And so even though, we're focusing now on the other side of the market, which is resale back to the public, it's still going to be with that same goal in mind. And it's still going to be about maximizing the win for everybody, both the seller and the buyer and Alloy as a company and for our shareholders. And so I would expect to be able to purchase things from Alloy in the very near future.
Let's go.
Yeah.
So exciting. This has been a real treat, Brandon. I am excited for you. I'm excited for Alloy. People can find you on thealloymarket.com. Is that right?
Correct. Thealloymarket.com. My head of marketing would be so angry if I didn't say, if you use the bonus code HUSTLE, we will add $20 to anybody listening to this if you sell gold to Alloy and use the bonus code HUSTLE.
Love it. What a treat. Really
Cool.
appreciate you. I think this is so valuable for a lot of founders and investors to hear, and keep crushing it, man. You guys
Awesome.
are doing some awesome things.
Thank you so much for having me, Alex. I really appreciate it.